Apple is expected to report earnings per share of $4.17 on revenues of $84 billion. That's according to estimates from FactSet in its fiscal first quarter. And that represents a year-on-year decline on both the top and bottom line. Earlier in the year, CEO Tim Cook revised down his revenue guidance for the quarter, blaming the slowdown in China and a stronger US dollar. Joining me now to discuss is Stuart Miles, founder and CEO of Pocket Lint. Thanks so much for coming in. So obviously last quarter's earnings was one of the key turning points for this stock towards the downside, and on the day the stock actually moved 7%. So clearly investors will be paying close attention to this earnings report once again.
Yes, and this earnings report obviously comes off the back of the advisory warning at the beginning of January that suggested that China hadn't performed as well for Apple as they'd hoped. It's interesting looking at the numbers quite granular across the board that they issued. Everywhere else, they seem to have got the numbers on the measure of roughly where they are. And Apple have been traditionally very good at judging how many iPhones they're going to sell, how many services they're going to sell, how many bits and bobs, elsewhere. It looks like China has completely caught them unaware. I think the estimates are about 4 billion down in sales from there, and you can see that's obviously left a huge hole, which translates to the top number of not hitting their targets.
Now, this is the first quarter that Apple won't be reporting its iPhone shipments, and that was the key number for investors. So what do you think we should be paying particular attention to in this report now that earnings figure is stripped away?
I think Apple has always, they've got very focused, and everybody, the market specifically, has got very focused on the idea of these numbers. How many iPhones have they sold? And what we're seeing across the market is that most of us have a phone that is very good, that we don't necessarily need to upgrade. And I think, on a yearly basis in the way that we have. So if you start looking beyond Apple and seeing what else they're doing, what other headways they're making, that's where it seems interesting that, you could see quite easily a future Apple that doesn't feature the iPhone, but it's still a very successful company.
So interestingly that you bring that point up, because there was a report from Cheddar saying that there's potentially going to be a rollout of gaming for Apple. Do you think that's a potential area of growth?
Huge. We're seeing that across the industry of adopting services, and this idea of, Microsoft has been very successful with adopting a service-based sort of, revenue model. You'll see that from Apple. They've obviously got Apple Music that's got, last count, around 36+ million users worldwide. They're already have confirmed that they're going to be launching a TV service to go against the likes of Netflix. We've got Disney launching a TV service this year. You'll see other subscription services all bundled in, so whether that's news for services to be able to charge for that, or whether it's a gaming service as well. And what that allows you to do is, if you've got a base of iPhone users that aren't necessarily upgrading their hardware every year, but you're charging them upwards of £15, $20 a month for services, then it brings a nice revenue stream in of a monthly rolling subscription base that doesn't rely on you having to upgrade hardware all the time.
So going hand in hand with that is a report from Gartner which said that Huawei has now overtaken Apple to be the world's second largest smartphone maker, only second to Samsung. Of course, that's the market leader. Is that a sign of things to come for Apple?
I think it's certainly a sign that the Chinese manufacturers are looking, as the Chinese market isn't performing as well, the Chinese companies like Huawei, Oppo, Xiaomi are all moving out of China. In the same trick that Apple applied a couple of years ago and it moving out of the States, they're trying to move out of China to see what other markets they can command, to conquer, to sell new devices to. They've all seemed to hit this roadblock with the majority of, they can't crack America. So obviously there's a lot of issues with Huawei at the moment with indictments and things like going on. There's a focus, so what they're trying to do from that is then plough all their efforts into Europe to try and expand, and by doing that they're bringing the cost of these devices down but flooding the market with multiple choice for the consumer.
Now let's talk about China a bit more, because one analyst, Dan Ives, said that all eyes are on China this quarter, but he believes that the demand weakness that we're seeing from Greater China is maybe more related to execution issues and pricing hubris rather than the macro picture. What do you think?
I think a lot of companies, and you're starting to see this, and I think this will be a big trend for many hardware manufacturers across, not only Apple but other places, across the first quarter results, are going to be that China has slowed down. If you look even wider afield to say someone like JLR, Land Rover, Jaguar, China's gone from their #1 market to now their bottom market. And suddenly, if you've invested all your efforts into trying to make sure that market obtains and continues to grow and suddenly it hasn't, then that causes you problems and trickles down elsewhere. Apple, I think, is big enough as a company and has a diverse enough product range, from services to AirPods to watch to iPad to phone, that it can weather some of that storm where other companies can't necessarily do that.
Now let's talk about the valuation. $1 trillion valuation seems like a distant memory. Do you think we'll ever get back there?
I think Apple have been unfairly valued. You know, they have got this sort of fantastic design IP. They've got, you know, a lot of services, everything from even things that you don't really realise, like Apple Pay. Every time someone uses an Apple Pay, Apple take just a couple of cents off that, and that in the States is having a huge effect. You know, so I think there is lots of ways that Apple is safeguarded itself, apart from just the huge mountain of cash that it has in a bank somewhere. So I think that they are unfairly valued, certainly compared to someone like Amazon, who is on that $1 trillion club as well. Amazon have lots of runway as well to do lots of different things, and I think, you know, Apple likely. So I think it is a tiny bit unfair. So yes, I do think that they will be able to get back up that way.
Another key area to watch in Apple's results, of course, will be the guidance, what we're expecting for the March quarter. What do you think we should watch out for there?
I think the March quarter will be somewhat subdued. They'll obviously have learned a lot from the lack of sort of parity they had with China. I think you'll see a slight growth. You're already seeing they're introducing the iPhone SE back into line. We're expecting a cheaper alternative rumoured to be the iPad Mini 5. We've got even talks of an iPod coming back in an attempt to try and boost those volumes of cheaper devices as they look to say, well, we are affordable. It's not all about the high-end stuff. You know, maybe we can then claw back some of the ground that way.
Stuart, thanks so much for your time.
No problem.
That was Stuart Miles, founder and CEO of Pocket Lint. I'm Victoria Scholar, and thank you for watching IGTV.